Hey, good morning. Welcome back to the most boring channel on YouTube, the Junius Maltby channel, where we will take a look at the economy, gold, a brief view on some of the cryptocurrencies and some opinions based on that, and news surrounding the currencies as far as the dollar goes. My least favorite currency of all the fiats, the one I hate the most, and I actually always seem to applaud any negative news that surrounds the dollar. I just like when it gets beat up on, bullied on. I despise it so much and everything it represents. So here we go. We've got this article up first. Economist Jim O'Neill explains how the dollar will lose its kingpin status. I'm sure this will affect all of us in some way, for positives and negatives. But the greenback's status as the world's most powerful currency has been questioned for decades. But contracts based on the US dollar continue to dominate global markets. However, in recent months, speculation has intensified that China could be poised to make a major move against the dollar's dominance. And we've talked about these major moves and some of the positions that China's taking up, strategically placing itself in preparation for challenging the dollar's dominance globally. So let's see what Jim O'Neill has to say. Renowned economist Jim O'Neill said Tuesday that investors have to believe the dollar is not going to be the kingpin currency forever. The greenback's status as the world's most powerful currency has been questioned for decades, but contracts based on the US dollar continue to dominate global markets. However, in recent months, speculation has intensified that China could be poised to make a major move against the dollar's dominance. When asked to what extent he felt the dollar's influence could be dwindling, the former chairman of Goldman Sachs Asset Management told an audience at the Abu Dhabi International Petroleum Exhibition Conference, "I hold two contradictory views on this. Firstly, it's never going to happen because the dollar is the dollar. However, Germany has recently become China's #1 trade partner. And it is when you start to see things like this that you have to believe the dollar is not going to be kingpin in the future like it is today." China is the world's top oil importer, and so Beijing sees it as only logical that its own currency should price the global economy's most important commodity. But beyond that, moving away from the dollar is a strategic priority for countries like China and Russia. Both aim to ultimately reduce their dependency on the greenback, limiting their exposure to U.S. currency risk and the politics of American sanctions regimes. The plan is to price oil in yuan using a gold-backed futures contract in Shanghai, but the road will be long and arduous. Remember, we've covered this and discussed it before, and now you're seeing it on CNBC. A lot of people thought that the Shanghai-backed, gold-backed futures contracts surrounding oil and this move was rumor and just theory, and that it wasn't really going to happen. And now you're seeing it much more mainstream being reported. I truly believe this is going to happen, and I truly believe it's going to have a severe impact on the dollar's dominance on the global scale. But let's continue. I don't think you can say with confidence that over the next decade the dollar is finished, but the ongoing geopolitical developments suggest that could change in the future, he said. Such an interesting piece of news here that we're going to report on a second time. We covered this the other day right after it happened, and here's some more information on that. The mysterious gold trade of 4 million ounces spur price plunge. This was just recently and quite significant in just what took place. But one other opinion piece that I read regarding these trades was they were actually surprised gold didn't drop further. So that little fact or piece of this is interesting. Also, the fact that gold somehow resisted this dramatic sell-off and didn't fall as far as it could have. After 11:10 a.m. on the COMEX in New York, almost 40,000 contracts, each representing 100 ounces of the metal, traded in a span of 10 minutes. that triggered a sell-off, sending prices down as much as 1.1%. So think of that, in 10 minutes, 4 million ounces of gold dumped on the market. Let's take a look at the chart just that shows you what that event looks like when it takes place. There was obviously buyers lined up ready to receive gold at the price it was being sold for. But there you can see it switch hands because for every seller there's a buyer. Gold sell-off. Prices head for biggest loss in 3 weeks. You can see it just, inching along there at the 1280-ish mark, right above that 1280 line. And then it just, boom, hits that cliff there. Big dump, 4 million ounces. And you get that price plunge there. It has since recovered, and we'll take a look at that in just a moment and some reasons why that is. But also, I've got some news here that points to expecting a nice little sell point on gold here coming up. When I say sell, I mean on sale. I think there's going to be a price drop based on activities taking place in Venezuela when their gold hits the market soon, because they're going to have to take it to the international pawn shop so they can pay their rent. So we had those losses the other day, and now we see gold erases losses as US dollar stock market show weakness. There's been a recent dip in the stock market this morning. I guess GE reported some news that the investors were not too fond of, causing a plunge there, nice dip in their prices. And so that affected the overall US stock market. We've also seen the dollar showing some weakness. And let's take a look at the pop in gold. Not too sure where the coke heads of Wall Street will have the yellow metal close at today, but you can see it's popped up there a little bit, looking good. And article out, I didn't put it in here, but I was reading it earlier from one of the big banks that likes to prognosticate what they think gold's going to trade at for the year, even though they are usually wrong and have to revise their statement later on after news changes and they realize they were wrong. They've got gold trading at around 1285 for the rest of not only this year, but going into next year. So 2018. 2018, they're looking at a 1285 mark for gold for that year. They'll probably be wrong. They'll probably end up, bouncing up off 1400. Who knows? It could go higher. We don't know what's going to happen. The world could wake up tomorrow and realize that the king has no clothes, the dollar's a leper, and boom, you've got gold bouncing and being where it should be, trading at 7,000 to 10,000 an ounce. We'll see. Who knows? Could be wrong. But let's move on here. All right, bargain hunters have stepped in to buy the dip in gold prices, which have pushed above unchanged and are at daily highs in late morning dealings Tuesday. A slumping U.S. dollar index and a sell-off in the U.S. stock indexes are supporting the buying interest in the gold market. December gold was last up $2.10 an ounce at $1,281.30. You know what I'm going to do? I don't do this too often. I'm going to take a brief pause here while we are making this video and go check and see what the live gold price is right now. We just read 1281.30. That's when I grabbed this slide. We'll see if it has moved from that point. And there it is, sitting currently at $1,280.01. Dropped a nickel while I was looking at it. It was actually $1,280.06 right before I snapped the shot. But it's moving around a little bit up and down, and looks like it's down for the day from the day's high. We'll have to check back later on and see what it closes at. That'll be a nice little comment assignment for everyone. You guys can, down in the comments, I know we'll probably get a ton of them, but go to your favorite site, whether it's goldprice.org or look up a live gold price, and throw the gold price currently in US dollars down below in the comments. Of course, leave your normal comments, but somewhere in the comment, maybe you can include the gold price, and we'll see what it closes at today. And perhaps you're watching this video a week or two or a year from now. Go ahead, put the gold price down below, and we'll compare it to this $1,280.01. This price point currently. Maybe far in the future, someone will be watching this video, and they will consider this an incredibly low price for gold. Another headline out today, global gold bar coin demand shoots up 17% to $9.1 billion in quarter three. And I remember just a week or two ago reporting on how the bar and coin demand was low and had dropped significantly. So something changed. The gears have shifted. Maybe the wind has shifted. Maybe there's weather on the horizon. But let's see what they have to say about coin demand shooting up 17% in quarter three. New York scrap register. Global gold bar and coin demand shot up 17% year on year to reach 222.3 tons or $9.1 billion during the third quarter of this year, according to the World Gold Council. But the year-on-year comparison flatters to deceive. Third quarter of last year was the lowest level of bar and coin demand since quarter one 2009. When considered in the broader perspective, quarter three 2017 bar and coin demand was below its 3, 5, and 10-year quarterly averages. But inflows into these products continued to lag well behind 2016's record levels. During the quarter one to quarter three period, inflows of 179.7 tons were just 1/4 of the record inflows seen in the first 9 months of 2016. ETF investors, the cokeheads of Wall Street, lacked a clear catalyst in quarter three as the gold market was pulled in different directions, culminating in modest global inflows for the quarter. Venezuela defaults and gold is down? Question mark. This is an interesting article, and it's regarding Venezuela taking its gold to the international pawn shop as it faces default and an eviction notice. So in order to pay rent, this country is going to have to sell their gold to continue to exist. So let's see what the idea is behind this article here. If Venezuela defaults, the likelihood of gold prices dropping before, during, and slightly after the default announcement are large, as the lender who is about to get collateral gold instead of cash is, quote, more likely to sell gold given to him or at least hedge the physical with futures, unquote. How dare them assume the gender of who is going to receive the gold collateral? What if it's a her or an it? Just kidding. Interesting, though, when they use the pronoun him there. We live in an age where you have to use the right pronoun or you get yelled at. Love it. The truth is unknowable in certitude, but absent other factors, the reason for this explaining this seeming inconsistency, worthless fiat currency and lower gold prices, is simple. We've discussed it here before. 1. Venezuela has gold. 2. They need to raise cash to pay debts. 3. They have gold collateralized loans to be repaid. 4. If they wish access to global credit markets, they need to get proper with creditors. 5. Gold is then sold by creditors, Venezuela itself, or bullion dealers selling in spec in anticipation of Venezuelan-related sales. We cannot help but think the Venezuela gold swap lapse is somehow partly responsible in the market's move lower over the last few days, if not the last weeks. The basis for that is simple, but only conjecture on how markets digest defaults on collateralized loans. And let's face it, by the time it is disclosed, the creditor knows and is out of risk if an actual default occurs. Mortgage lenders don't advertise their loans defaulting. Why would anyone think this is fresh news to the gold community? When a debtor defaults on a collateralized loan, the collateral is passed to the lender. A simple example would be if you defaulted on your mortgage, the bank would take possession. Banks aren't in the real estate business and will sell that home to stay liquid and get that cash back to work other deals. If, and it's a big if, as there are many moving parts to these deals, Venezuela does default on a gold swap loan, then the effect would ultimately lead to the lender taking possession of the asset pledged, in his case gold. And that makes the lender, who is not interested in being long gold and can find better, lower lying fruit for his cash, more likely to sell gold given to him or at least hedge the physical with futures. Here's a situation I'm pondering. What if they did want the gold? What if this mysterious lender takes possession of the collateral gold and doesn't dump it on the market, but chooses to hold it for whatever economic reasons or prognostications their little workers and office cokeheads have predicted, and they keep it. They keep the gold, and they don't sell it on the market. It would be interesting to see the ramifications of that choice, and if a bunch of people going into the situation, reading the news, dumped gold expecting it to hit the market because of the Venezuela default, and then it never happened. I would be curious to see how the markets would react to that decision. It's always interesting to see when something happens that nobody expected. This is all conjecture at this point, but we're pretty comfortable with our assessments here of what could or did happen in the past few weeks. A little reverse engineering says odds are gold sold off on a leaky boat in someone's port. It is notable that we have seen this before when other bullion banks bought sovereign gold from central banks. Gold prices dropped before the sale. Bank of England in 1989 to 1999. Remember that, guys? Brown's down. Not just because it was being sold, but also because that it would be sold was leaked. And when that happens, the price drops, and the seller must sell at a price to the bullion dealer lower than when he first got the idea to sell his nation's gold. No doubt the Bank of England sales were irrational. Central banks weren't that sharp on handling their deals in those days. Well, here's the deal. Venezuela was declared in default by S&P after missing bond payments. And this is all recent news, anywhere from an hour to 14 hours ago. Venezuela is in default and you may own its debt. No, I don't own any of it. Venezuela in selective default, says credit ratings agency. Okay, let's take a look at the news. We just talked about what could happen with the gold when the gold hits the pawn shop, so we're going to have to keep an eye on gold prices regarding this news and these developments. Venezuela slips deeper into crisis after default. Caracas is overdue on $420 million of interest payments and $60 billion debt pile. Venezuela suffered what is expected to be the first in a cascade of defaults on its $60 billion debt pile after missing several interest payments. The country on Monday evening missed a deadline to make $200 million in interest payments on two of its government bonds, spurring S&P to formally declare the first of many defaults. Caracas is already overdue on $420 million of interest payments on other bonds, which will also soon be in default, most likely along with PDVSA, the state oil company. Venezuela is running out of cash, as you can see here. And who is all of this money owed to? Let's look at some of the holders of Venezuela's debt. These are the top institutional holders of Venezuelan debt. Bonds sold by both the government and state-owned oil company, PDVSA. Fidelity Investments, $572 million. T. Rowe Price, $370 million. BlackRock iShares, $222 million. Goldman Sachs, $187 million. Invesco Power Shares, $113 million. So for the cokeheads of Wall Street and those that like to play the day trading game and who are tied up in foreign investments and in any of these major funds here, you may very well be exposed to these defaults. And let's take a look at those bonds and their valuations. Here it is, Rocky Road. Venezuelan bonds retreat after S&P declares default. There are the Venezuelan bonds, cents on the US dollar. Bitcoin slides by over $1,000 in less than 48 hours. Yes, this is sort of old news from the other day, but I wrote a piece on it if you're interested. Volatility of crypto and store of value. You can read it in its entirety if you find me over on Steemit at Junius Maltby, the article there. I included within the article a quote from Alan Greenspan, taken from Alan Greenspan on gold, the letter he wrote in 1966. I've actually read the entire piece on the channel, and it's in the archives. But this quote here: money is the common denominator of all economic transactions. It is that commodity which serves as a medium of exchange, is universally acceptable to all participants in an exchange economy as payment for their goods and services, and can therefore be used as a standard of market value and as a store of value, i.e., as a means of saving. In that quotation, we see a lot of different attributes that he alludes to as far as a medium of exchange: universal acceptability, a store of value, something that's stable. And the reason I included that in this article is it's part of my argument that cryptocurrencies are not yet money and cannot yet be considered money in any way due to their fluctuations in the absolute volatility, their lack of universal acceptability. And by sheer coincidence, this article popped up today. Bitcoin isn't a currency, it's just an asset. Shark Tank's O'Leary. So you know who Dennis O'Leary is. I don't agree with everything he believes or says, but on occasion he does espout some piece of truth or something I might agree with, and this happens to be one of them. Bitcoin and cryptocurrencies have broken records this year as more investors, particularly millennials, flock into the market. The leading digital currency, Bitcoin, has managed to rally significantly, this rising to an all-time high of nearly $8,000 and up over 500% year to date. But one famed investor remains a little skeptical about the future of Bitcoin. Quote, "Bitcoin to me isn't a currency, it's an asset," unquote. Kevin O'Leary, chairman of O-Shares ETF Investments and star of ABC's Shark Tank, told Kitco News, quote, "I'm not sure Bitcoin is a great long-term investment because I don't know what's going to happen to it," unquote. Instead, O'Leary said he prefers to stick with what he knows. "I do know a company that makes free cash flow that pays you a dividend every quarter. To me, that is a good idea. I love my dividends," unquote. O'Leary recently launched an app called Beanstocks, which aims at attracting millennial investors by providing fractional share ownership. That's another thing I would completely disagree with, and I think it's hilarious. It's a different topic here, but it's something he is marketing, and it's about, if you can't buy a full share of Apple, you can send in $5, and you're basically buying fractions of shares. So it's going to be very interesting to see where this ends up, because you're going to have a bunch of millennials and people out there trading on this new platform where you own fractions of a share rather than an entire stock share itself. And I'm sure there's going to be some fees attached to that and some wealth fleecing programs. Not interested. Thanks, though. I'll take my medal. And you know what? I'll gamble in the crypto rather than do anything with these fractional share ownerships. So, again, I'm not entirely against crypto. You guys know that. I like the idea of it, but let's be clear on what it is. At this point, it's a digital fantasy gambling asset. It's not a currency. It's not a unit of exchange that's universally accepted, that's stable. Please don't tell me that it's stable. It's very volatile. It's up and down. It's swinging all around. It's bouncing around the room like a psychotic patient. And it just needs to sit on a couch and chill out for a little bit. Maybe drink some tea and take a Valium and reach some kind of homeostasis or stability. If you want to be a currency, if you want to be a money, a unit of exchange, you have to be stable. People have to trust you. No one's going to put their wealth into crypto when there is a risk that tomorrow morning it's worth 20, 30, 40% less, 50% less than it was the day before. Okay, that just doesn't happen with gold. You're never going to buy gold at $1,200 an ounce right now, $1,280, and tomorrow wake up and it's worth $640. That's just not going to happen. We saw Bitcoin Cash, BCH, plummet from well over 2,000. What was it? 2,500 the high the other day for Bitcoin Cash. 2,500 trading around 1,300 today. Just shedding nearly 50% of its value in one day. Sorry. I mean, you guys really think you're going to wake up tomorrow morning and silver is trading at $8 an ounce? Tomorrow. Not 2 months, not 3 months from now, not a year from now. Tomorrow morning, you wake up, silver's $7.99 an ounce. Not going to happen. And if it did, it would be rapidly consumed. It'd be purchased off the market. You probably couldn't even find it for that. But yeah, it just doesn't happen. The metals, they're much more stable. Much, much more stable. Crypto's a great place to gamble. It's a great place to pull the lever, looking for three cherries to pop up. Casino market. But I think it's being infested. We're seeing things like ETFs, and we're going to look at futures trading on the crypto. It's being invaded. It's being invaded by the cokeheads of Wall Street. We've got hedge funds buying it up. You've got JP Morgan stepping into the game. You can't compete with those guys. I mean, they already threw $1 billion at it once. So they're going to pump and dump, jump from one to the other like we saw with Bitcoin and Bitcoin Cash, Bitcoin Gold. We saw money move from one of those to the other at lightning paces, faster than regular investors or people who happened to be sleeping could move wealth from one to the other. And that's just something you can't compete with. That creates an unstable market. A friend of mine contacted me on one of the evenings that this was taking place, just watching it himself, and he informed me that 150,000 Bitcoin transaction orders were jammed up on the blockchain. Couldn't even move. That was people basically running for the fire exits. And there just wasn't enough exits to process the amount of people that were trying to get out of the building. So I'm sure there were some people that purchased Bitcoin at 7,900, Bitcoin Cash at 2,500, and got jammed up, unable to move as money flowed from one to the other, and people got caught. And that's how wealth gets evaporated. It doesn't get evaporated. It's the wrong term. It's transferred. So for every bad part of a trade, somebody happened to be on the good side of that trade. So for the people who purchased Bitcoin at let's say 7,900 and got jammed up in the exits and were only able to get out at, let's say, 6,500, and they have on its way down because it was plummeting. I think it plummeted down to 5,800. Those people lost, $1,400 per Bitcoin, and somebody made that 1,400 on the other side of the trade. So the money didn't disappear, it didn't vanish, it just changed hands. That's how it works. So someone's making money off of these situations and this instability, this volatility. But again, I did write a little piece on it, just an opinion part. It's not very long, it's not very exhaustive, and I'm by far any expert on cryptocurrency, but I do know my economics a little bit, and I do know how these things work. And this isn't my first rodeo when it comes to playing a game, because that's what it is. It's a game, and typically in these games, the house wins. But have fun, Take care. Thanks for participating. Thanks for being part of the Junius Maltby channel. Thanks for tuning in on this rambling episode, this 28 minutes, now 29 minutes of boring material. Cover yourselves, look around, keep your head up, keep your head on a swivel. Look at what's going on in Venezuela. Look at the metals prices. Jump in when there's a deal. Hold, buy and hold. Stack your metal cold, hard, and deep. And if you feel like gambling with some crypto, go for it. I'm not going to jump down your throat for that. Just do not expose yourself dramatically. Do not risk yourself. Do not sell metal for crypto. I know some of you have done that. Just don't do it. If you feel the temptation, do not do it. Don't. Keep your metal. Gamble with a couple fiat bills if you feel like it. And have fun while you're doing it. Just make it some entertainment. Try to make a quick buck and then move it back into metal or real estate. Thanks for tuning in to the Junius Maltby channel. Have a great rest of your day.